All right, let's peek behind the curtain of the Bitcoin market. Today, we're going to use a really powerful tool called Gamex analysis. Now, this basically decodes what the big players in the options market are betting on, and it lets us map out a clear strategic framework for February. So, let's get right into it. So right now, Bitcoin is sitting just over $77,000, and you can just feel the tension in the market, right? Everyone's holding their breath. Is this the calm before a big storm, or are we about to see a massive breakout? Well, instead of just guessing, we're going to look under the hood at the market's engine room, the options data, to find out what's really going on.
So here's our game plan. First, we'll talk about the single most important rule driving the market right now, what I'm calling amplification mode. Then we'll look at the week ahead, which is tactical chaos. After that, we'll zoom out to the whole month, where we get a much clearer map. We'll do a deep dive into the most likely scenario, and then we'll wrap it all up with your playbook for February.
Okay, first things first. We absolutely have to understand the weird environment we're in. See, the market isn't acting normally. It's kind of stuck in what we can call amplification mode.
Now, this amplification mode has a fancy name, a negative gamma regime. But what does that really mean? Well, in simple terms, it means the big market dealers are forced to chase the price. Think of them like they're on a seesaw. If the price starts to go up, they literally have to run to the high end and push it even higher. And if it goes down, you guessed it, they have to run to the low end and shove it down even further. This creates this feedback loop that makes trends way stronger and reversals much less likely. It's basically a recipe for some serious volatility.
So, knowing the market is in this supercharged amplification mode, what can we expect this week? Well, if we look at the short-term picture, honestly, it's a bit of a mess.
Yeah, our confidence in any short-term forecast is extremely low. And here's why. The weekly options data is telling us one thing, but the bigger monthly picture is pointing in a completely different direction. It's like your GPS is telling you to turn left, but all the road signs are screaming at you to turn right. It's just confusing and totally unpredictable. So what we're left with for this week is pretty much a toss-up. There's a 40% chance the market just goes sideways, a 35% chance it takes a nosedive, and a 25% chance it rips higher. With no clear winner here, the short term is just a minefield of, tactical chaos.
But here's the good news. If we zoom out from all that weekly noise and look at the entire month of February, well, the fog starts to lift, and a much, much clearer picture comes into view.
And look at that, our confidence jumps way up. So why the big change? It's because on this longer time frame, all the important signals start singing the same tune. The major resistance levels, the key price targets, they all align almost perfectly. All that confusion from the weekly data just kind of melts away.
And this alignment reveals something really critical. The bearish breakdown scenario now becomes the most likely outcome, sitting at a 42% probability. This is all because of something called bearish asymmetry. Think of it like a coiled spring. The options market is set up so that a downward move could release way more energy than an upward move. The market is just a lot more sensitive to bad news right now than good news.
All right, since this is the most probable path for the month, let's really break it down. What does this bearish scenario actually look like step by step?
This whole thing plays out like a series of falling dominoes. The first domino to fall is that $75,000 level. Now, you have to understand, this isn't support, it's a tripwire. If the price breaks below it, our amplification mode kicks into overdrive. Dealers are forced to sell, creating a downward spiral that pushes the price fast towards that $70,000 to $72,000 zone.
But the real danger zone, the one you have to watch out for, is just below that target, at what's called the $69,000 gamma cliff. Imagine you're walking on a frozen lake, and all of a sudden you hit a spot where the ice is paper thin. That's the gamma cliff. If the price hits this level, it triggers a massive, sudden wave of selling from dealers. We're talking about a $70 million shift almost instantly. This is what can cause a flash crash, where the price doesn't just drop, it completely falls off a cliff.
Okay, so after all that, what are the key takeaways? Let's distill everything down into a simple, clear playbook so you know exactly what to watch for this month.
Here it is, the whole monthly picture on one slide. You've got the bearish path with a 42% probability. That kicks off if we break below 75 grand, and it's targeting the low 70s. Then you have the base case, which is neck and neck at 40%. That's just us chopping between our key levels. And finally, the bullish path, the underdog at 23%, needs to see a powerful break above 81,400 to even have a shot at 90,000 or higher.
But look, if you remember nothing else from this whole thing, please remember these 4 numbers. $75,000, that's the bearish tripwire. It is the most critical level to watch. 81,396, that's the line in the sand for any kind of bullish rally. $90,000, that's the main prize the bulls are dreaming of. And finally, $69,000, that is the ultimate danger zone, the gamma cliff, where things could get very messy, very, very fast.
So the market is like that compressed spring we talked about, just ready to uncoil with some serious force. The key levels are set, the probabilities are on the table, and now we watch and wait. The big question for February is simply this: which trigger gets hit first?